Welcome back to Income Trading 101. Today we're going to take a look at Bitcoin, mostly because the U.S. equity markets were closed today. Today was Monday, February 21st, 2022, and the U.S. markets are closed for President's Day. So let's just take a look at this past year in Bitcoin. There we go. We'll actually pull it out. Actually, you know what? I want to go all the way back here, so you can see just to sort of get a taste of where we've come from. 2020, of course, it's a lot more flatlined, and then in October it just took off, right? And I'm sure many of you had some Bitcoin back then, may have gotten chopped up. We saw a high back in April of 21, close to what this has been, almost 65,000. We broke through that high this past November, and we haven't seemed to be able to get back there since. So I want to take a look at what's going on in this market. We're going to do it the normal way that we do. We're going to use a couple of moving averages and get going. So I'm going to change this first one to a 10-day, make it my green. My green means go. Next one we're going to turn into a 20-day. And I think you guys know I've mentioned it on previous videos, but those were quite a while ago. I tend to use the same metrics that I use for when I'm viewing stock. There isn't a case to be made that a 10-day, 20-day, and 60-day are less relevant in crypto, because crypto trades 24/7, 365, whereas the stock market is based on a 5-day work week. So anyway, I stick with this for now, and you can see how it responds over time. During bullish periods, you'll have the green higher than the red, so the 10-day is higher than the 20-day, and both of those will be higher than the 60. And during times of bullish or bearish behavior, you'll have the 60-day higher, so prices below its 60-day moving average, below both the 20 and the 10. So when these are all in order, it gives us a clear signal of bull versus bear, and we do end up looking for some crossovers. So I start looking here. We saw a full-on bearish crossover be complete back in December, and it really has been bearish since then. We did just recently, just a few days ago, last week, we saw the 10-day move above the 60-day, but now we've literally just had another crossover. And with so much going on in the world, it's not surprising of this, but these three right now, so if you look, the 60-day is higher than the 20-day, which is higher than the 10. That is fully bearish on the daily level. Let's go ahead and drop down to more of an hourly, just to get a sense of what's going on in the hourly. So hourly time frame, on February 17th, more recently, we saw a bearish crossover, and we've really kind of dropped off since then. You did have price push close to the 60 period, which this is now hours, so 60-hour point. But man, we are fully bearish right now with all three moving averages in line. I'm going to take it down lower to like a 30-minute. Same, still bearish. Let's look at a 15. Still bearish. So when you have that many consistently, when you have that many time frames from low to high that are all showing the same trend, it's a good chance that what you're seeing is not by mistake, but that we are indeed in a little bit of a bearish period. I do like the fact that this crossover of the 10 and 20 just happened 2 days ago, and it could very well, with one strong day, push higher again, and we might pop. So I don't want to make it sound like it's a forever thing, but this analysis right now looks very bearish. Let's go ahead and get rid of these moving averages. Take a look at the MACD. And I like using the MACD just because it gives me a quick look at momentum and which way that momentum is going. So right now, we did have a bearish crossover that happened on February 18th, and this is using the daily chart, where the MACD line fell below the average. So that is bearish, and it looks like our signal line just crossed over into negative territory. So that is fully bearish. But again, because this happened so recently, one or two strong days could truly change this. Let's look at the hourly. So the hourly switched over on February 21st and has been sort of staying in the oversold area, but it's still, given this distance between these, it's still appearing to be going lower. So we haven't seen a crossover happen yet. At the 30-minute level, more of the same, kind of flattening out. But if you notice the distance between the signal line and the MACD line, and that's really what this histogram notes. So when these histogram bars are larger, it means there's a larger differential between these two lines. And so that's more of a continuation of a trend. But when they start to flatten out and get lower and lower, that means that we might very well be approaching a crossover, which could mean a change in momentum. And look at that, we've got a green bar happening right now in the 30-minute chart, but we're not sure. We'll see if that lasts. And then on the 15-minute, you've got, with these two price bars going higher, you actually have a little bit, you can see the histogram is tightening up again, and it could definitely go green. When it goes green, that means that the MACD line is above the signal line. And if you guys are curious what these MACD line and the signal line, what they mean, how they're calculated, there's actually a video on my channel that explains technical analysis. So feel free to look for that one. I believe it's titled something along the lines of how to trade stock using technical analysis. You can tell I got really creative in that one, but that's it. Feel free to take a look. Let's go ahead and get rid of this MACD. We're going to step now and just take a quick look at, I want to look at the history. I'm going to look for support and resistance lines. I like using Fibonacci Retracement, but given that we've got just a lot of back and forth, I'm going to first see where we're sitting right now. So, because I tell you, I want there to be support in this market. I really am long some crypto personally. I would love to see these markets go back up. And this red line, I don't even have to draw a line. This red line shows you where price is right now at 36,667 for Bitcoin. And you can see that this has been an interesting line. So back here in January of 21, we saw pricing actually kind of tighten up around there. This line became a bit of resistance, dropped lower, and then price blew through it. We saw this same area happening in May and June of 2021, and then when price fell below it, this line became a little bit of resistance, right? So clearly this area has some strength. This is an area where people are looking at it as support. It played support here in August, and it almost played support here recently. Look at that on February 3rd. That is a support line, and we're sitting right on it right now. And given the momentum, it looks like we might actually push below it, which would mean that support line would likely fall. Let's do a quick, we can do a Fibonacci retracement. Let's see if I can find one real quick. I guess it was already chosen. We're just going to go from here, this low, to this high, and drag it across. A little tighter frame, a more recent retracement. So you can see we did, when we had this, for this up movement here that happened from July through really November, we actually ended up with a 78.6 retracement. So let's go ahead now, and we're going to make another one on top of that. We're going to go from this top here in November down to this low that we saw over here at the beginning of the year in January. We're just going to lay these on top of each other. The goal when I lay a Fibonacci retracement line on top of another one is I want to see if there are any areas that are truly looking like support and resistance consistently. So clearly this 50% line, this region here, 50% for both of these, is right around 52,000. So that's an area of importance. This 61.8% retracement has actually been, you can see it here, it was support in this area, and then it did play resistance here at the beginning of the year, and played a bit of resistance here recently. So you can look at that 44,000, really we'll just round it up to 45,000 in Bitcoin as being an area of possible resistance. And let's see, it's really interesting. Trying to make sure I see, let's see. So yeah, you could see the 38.2%, it's just a couple grand higher. So the 38.2% was 46,710. The 61.8% of the up move was 44,633. Let's see. Yep, our 50% levels were only $1,000 apart. And same with these up here. And that's largely because these moves were so close to one another. But still, you can start seeing areas of support, like support here at this 53,000, really 54,000 line. We saw it play a support here as well. So as far as where we are right now, I mean, we appear to be heading lower with, I would say, support. I think we're sitting on the support right now. Next up, I would look for this 33,000 point. And let's get rid of these. I would look for 33,000 to be the next support, simply because that was our last low. Let's just draw that across. There we go. I want to make sure it's straight. So clearly, you know, this is an area, I would actually take it a little lower as an area like this. This region in the 28,000 is actually support as well. But we are sitting at a point right now that is largely, and I can get rid of this because TradingView is already showing it. The current price is actually near support and resistance line right now. So that's it for our Bitcoin analysis. I think the next few days, possibly even the next couple hours, will be a discerning point for Bitcoin as to whether it's going to go ahead and push higher. Like, I do like the fact that you've got an up move. It came back, but we could easily get another leg higher. Or this could actually just be a period of consolidation before a continued move lower. And that might, here, I'll show you what that might look like as well. So if this is indeed a move lower, I'm just going to move this here, there, we could see, you know, pricing. If prices do touch this channel, I would expect it to drop on back into it. But I think right now, even if we were to just see some ongoing, you know, tightness in the market, I think it's ultimately just going to have to wait. So I wouldn't go looking to purchase Bitcoin right now. Maybe some call options on it if you really want to take that bet. But the momentum clearly has been to the downside, and we are hoping that this current point, this current line, is actually going to be a bit of support so that we can go ahead and push higher. If we do bounce off of this region, I would definitely expect Bitcoin probably quickly to push towards the higher ends of this, which would be closer to 46,000. and move forward. So lots to come. These next few days will be very interesting as the U.S. markets open back up. Obviously, there's a lot going on around the world with Russia and Ukraine and the way NATO is dealing with that. Also, you just saw the Beijing Olympics come to a close. So we'll see what's going to really happen in China's economy after this as well. So that's it. Thank you guys so much for watching, and stay tuned. I'll make another video tomorrow. Take care.